Hello, everyone. Phil, can you please turn off the music? Thanks. Amazing, amazing. Well, thanks everyone for joining, and it's a pleasure to be here with you guys, sharing today with the community. It's going to be a pleasure for me to introduce Mike to the community. He wants to give some very important updates for the upcoming year and some important updates for the Provenance community. So, Mike, welcome and thanks for taking the time to share today with the amazing Provenance community. How are you doing?
Great, great. All right, let's just hop into the slideshow. Hopefully, most of you already know me, but if you don't, it's great to have you on board today. So I'm going to go through a go-to-market plan, and it's a little bit different than what we normally do when we do these pulse updates. Although we'll have a lot of stuff in the normal pulse updates as part of this presentation. This is the go-to-market plan that we shared with Coinbase in terms of what we're trying to do to support listing. But it also has a very important governance proposal that we want to put out there, and I'm hoping the community gets behind and supports. And so the objective of this call is, one, normal updates, just in terms of where we are, how things are going. I know lots of folks want to understand where we are in the listing process and the strategy that we have around that. Two, the governance proposal that I want to put forward, that Figure is putting forward. And we'd like to get community feedback and support around that with the expected vote of that next week. And three, open up for Q&A and just general discussion. People can catch up. A lot of stuff going on in the market. There's a lot of news around what we've been doing with Hastra, which is a Provenance utility, certainly happy to talk to that. So if we go to the first slide, just in terms of numbers and updates. We've got 100 validators actively validating blocks. We have more than 100 validators, but we have 100 on every block signing. So that's important. And I want to come back to that in a minute. We're at 57,000 transactions a week, 20 billion in TVL. Figure is adding a significant amount of loans on the Provenance right now at an accelerated clip through the year. So this is visible. It's not material, non-public information. You can go on Block Explorer and see this, but the pace at which Figure is originating assets on Provenance has increased. And now the yields and democratized prime balances are also increasing. I think yields is over 250 million at this point. Demo prime, I think if you were on Twitter, you saw the Hastra announcement that it's at $275 million right now. So those are accelerating, and those are all happening on Provenance and generating hash fees. The fees are at 429,000 for the quarter, or at least that's where I think they come in terms of Q4. And right now that puts us at around the 14th largest blockchain, somewhere between the 12th and 14th largest blockchain by fees, depending if you're looking at DeFi Llama or you're looking at Artemis or some of the other aggregators that are out there. And this is what I really want to hone in and focus on, because what Figure is doing, we're making a very important strategic bet around our tactics. And it's really tied to this idea that the bulk of the market is built on this super app idea. So, Robinhood, SoFi, others are all trying to create the super app where it's one app that does everything: your banking, your brokerage, your crypto. And we think that the market actually is going to move in a different direction. We think it's going to be a wallet-centric market with a distributed application app layer, and you are going to self-custody your assets, and you're going to attach to whatever application it is that you want to finance from or trade on or lend through. And as such, that's really principled on underlying aspects of decentralized finance. And for decentralized finance to work, you obviously need to be on a decentralized network. And the core of decentralization is the strength of the validator community and the delegator community. And that validator community and delegator community needs to have sufficient economic to support their hosting costs, their upkeep, all the things they have to do. And it's integral to have a diverse validator community, again, for the premise of decentralization. So I want to see that fee count go from 429,000 a quarter to several million, multiple millions a quarter, and get Provenance in a top 5 in terms of fee generation, which is a meaningful lift, especially given the construct of some of the networks like Hyperliquid and Tron, where those might not be relevant comparisons to look at in terms of fee generation, but certainly like Solana would be. And so we want to be able to drive a higher fee usage. And right now, the bulk of the fees are coming off of gas fees and, to a lesser extent, very limited network fees. And the network fees are coming from, effectively Figure paying some nominal amount per loan it puts on the blockchain because it saves a lot more than what it pays. The economic benefit to Figure to use Provenance is significant. And so Figure pays a small amount, but Figure's unique in that capacity. Others don't do that. But what Figure has done is built an ecosystem on Provenance that includes democratized Prime, which we think is one of the fastest growing DeFi protocols right now, and something that we're heavily investing in. It has Yield, which is a future-proof fiat on-off ramp for currency onto the blockchain. Also, the only yielding stablecoin out there in security form. Obviously, not a Genius Act coin, but unique in what it does. It's got the alternative trading system, and this is going to become very important over the course of 26, because what Figure's doing is, in the first quarter, we are going to list Figure equity native on Provenance. It is going to trade on the alternative trading system in a limit order book. So this is unique in that if you look at what Galaxy has done or others have done, for US customers, they don't have a marketplace. There is no limit order book. For non-US customers, you're trading IOUs on the stock, not the stock itself. What this is we're minting the stock native on blockchain. It's trading on the ATS on a lob. It will have market makers on that lob. That stock will be portable onto democratized Prime for you to borrow against it, for you to lend it out, and it will be freely convertible back to the NASDAQ security. So, to the extent that you don't want to be on the blockchain, you can swap it to the NASDAQ. You want to be on the NASDAQ, you can swap to the blockchain. Right now, a lot of our large holders are going to swap from NASDAQ to the blockchain because it has greater utility. It's greater utility in terms of collateral value, greater utility in terms of stock loan. And so that ATS is going to be important because we're not doing this just for Figure stock. Our expectation is we're going to list lots of companies here. And we already have the second signed up. I'm not going to announce who it is yet. We'll do that, in the coming weeks in the press. But this is going to be an important construct of what we're doing. And the point of all this is the reason you would build on Provenance is not necessarily the underlying technology, although June and her team have done a great job hardening up the ecosystem, the technology stack. But there are lots of blockchains out there, and one of the things that we don't do with Provenance is we don't provide heavy rewards and incentives for people to build on Provenance, because we feel that you should do it for your own merit. If we have to incent you to do something on Provenance, then once that incentive goes away, you go away. And so we feel that Figure has an ecosystem that will attract development. In fact, June is working on a very, very large fintech to start using Provenance, and in particular democratized Prime, to finance receivables. And that's the kind of thing that we want to lean in and be able to do. But they're doing that because of the Figure ecosystem. So what we want to propose to the community, if you go on the next slide, is we would like Figure to step in to run the Provenance Foundation at the will of hash holders. So what I mean by that is we would step in. June would still head the foundation, but she'd have the full strength of Figure behind her in terms of engineering support for the protocol, business development support for third-party application development, support for listings and market making. And we would be doing this at the whim of hash holders. To the extent that the hash holders didn't want us there, they would vote us out. And the reason we think that this makes sense is we are best positioned to be able to extract network fees for the Provenance protocol when using Figure ecosystem. So if you're using Yields, if you're using Demo Prime, if you're using the ATS, if you're using other infrastructure like Dart that we built on there, effectively, we're in a position to say, look, you're going to pay gas fees, but you're also going to pay $5 a transaction for this use, or $8 a transaction for this use. And in doing so, we can extract some of the economic benefit that's accruing to people that are using Provenance blockchain. So right now, if you're using Provenance blockchain, if Figure wasn't paying the fees, it'd be getting an incredible deal because our gas fees are de minimis, right? They're cents per loan transaction, whereas what we're saving is tens of thousands of dollars. And so what we want to be able to do is provide a construct or a rubric where we can extract the economic value of using the blockchain. And given that most people on Provenance are going to be using Figure's ecosystem, that gives us the ability that if you're in Figure's ecosystem, you're paying network fees. And here's what the network fees are. What we're proposing is not just providing resources to support June in terms of developing protocol, which we've already been doing. Matt Conroy and his team have been doing protocol development. They built the Hastra protocol, for example. We're proposing to burn a portion of our hash stake. And this says burn 25%. I should say burn up to 25%. Since it's an old version somehow. But we're going to burn a portion of our hash stake. We are redesigning the tokenomics, as I said, to capture the network fees. We would not vote the foundation hash. So effectively, governance would still be uniform, one hash, one vote. We would not control the network. We would be somewhere between 15 to 20% of the total stock. And historically, we've abstained from voting, and we wouldn't vote for this vote either. So to the extent that we're voted in to run the foundation, that's going to have to come from the community. We're not going to vote to that. We're going to create utility for hash. And in particular, things like if you own hash, we're going to give you discounts on demo prime. If you own hash, we're going to give you discounts on your crypto-backed loan rates. If you own hash, we're going to give you discounts on your HELOC. And so we're going to look for ways to provide that and ways to cross-sell exposure to Provenance to existing Figure customers, people that are using HELOCs, for example. But most importantly, we're going to lean in heavily on the BizDev side. So we get enormous amounts of inbound from firms that say, hey, we want to do what you did. We want to set up a capital market to finance assets, to extend our lending protocols. And again, we're uniquely positioned to help people do that and uniquely positioned to filter that to make sure that we bring quality applications and quality projects on. And so Todd Stevens and his markets team are going to work hand in hand with June. They already are on this fintech I mentioned in terms of trying to stand that up on Demo Prime, but work closely with them to be able to drive real third-party development. And again, I'm going to emphasize this in that we don't pay rewards incentives to build on Provenance. We don't do that because you should be building because it makes sense to build on the ecosystem and get the benefit of the ecosystem. And I think this positions us to be able to reinforce and ensure that folks get that benefit of the ecosystem. So we're going to put this out to a vote next week. One of the things that I'm very focused on is making quorum easier. I want you to be able to very easily take your Figure wallet, for example, or Figure Markets wallet, attach to Pulse, and be able to cast your vote. I think the last process, it was a little bit challenging and a little bit convoluted, even for me to vote. So we're going to make quorum very easy, and we're going to run more frequent quorum because I want to make sure the community feels like they've got direct control of this ecosystem. This is decentralized. I'm sure a lot of you have been looking at the challenge with Aave and Aave Labs, and I don't want to find us in that kind of situation. Provenance is an independent network. The fact that we're acting to run the foundation, we're really acting to execute on the request of hash holders. What it is that you want in the ecosystem is what we are implementing and doing. And we're doing this at your will. When you want us out, we're out. And we put in a different foundation. So the decentralization construct is very, very important to me. Some people say I'm too dogmatic on it, but it's critical to Figure's roadmap and strategic roadmap. And one of the reasons why we're so heavily aligned with Provenance, because we feel that we have decentralization and a scalable protocol with the right technology resources and the right ecosystem. So next slide. So basically with what we're trying to do and essentially the structure of hash, again, what we're really trying to accomplish as part of this proposed change is reinforce the economics to the validators and delegators so they have sustainable economic to support what they do. We don't want them worrying about, I'm losing money validating on Provenance. We want them to be in a position where they actually are competing to write block because of the economics. And so again, a big chunk of that comes from network fees. The hash utility I spoke about, we want to be able to provide some construct of hash around discounts, potential rewards, access to the community, priority Q&A, even potential dinners and so forth. We had one of those or a couple of those in the past, and we certainly can have some more of those, maybe even a pinball tournament. But we'll do something along those lines as it relates to that. But most importantly is governance. And as I said, I'm going to work to create a more efficient quorum mechanism, and we are going to run more frequent governance votes as it relates to the ecosystem, because I want every hash holder to have a say in the network and a say in how the networks run. So we go on to the next slide. What we've been conveying to Coinbase and what we will be conveying to other exchanges is the robust ecosystem that exists on Provenance. I talked about a lot of this already in terms of yields, certainly with what Figure Markets has done on the marketplace side, and with Democratized Prime, which, as I said, I think is one of the fastest growing DeFi protocols right now. Figure and what it's doing in terms of its lending ecosystem and lending marketplace. Hastra, which I think is one of the fastest growing tokens on Solana, but there's gas fees that are paid back to Provenance on that. I'm happy to go into that in the Q&A if you want. And then Open, which isn't formally launched yet, so we don't want to talk too much about Open, other than that's the equity ecosystem I alluded to earlier, where Figure is going to be a pioneering first equity on blockchain, but we'll have subsequent ones coming in behind us. So what we're trying to emphasize is that we have an ecosystem that's valuable, that in itself will generate an enormous amount of fees for the underlying ecosystem, but also will attract in other participants, both as users of these applications and as builders of applications that are synergistic to these or even competitive to these, which is a good thing if that happens. So we go to the next slide. What we've been doing for the listings is, one, working on the market making side. So we've gone back and forth with Jump on a proposal to begin market making. One of the things is I want a market for them to make in. And so, I'm asking that the structure which we do is implemented once we're live on one of the SEX's centralized exchanges. We plan to do a Dutch auction in advance of listing on a centralized exchange to basically clear out people that want to sell with people who want to buy, and use that as an open price on the exchange. So we're going to go out, we're going to accumulate dollars because we have investors that want to own large chunks of hash. We have investors that probably want to sell large chunks of hash. We're going to cross them, clear out the market, try to alleviate any immediate sell or buy pressure that's going to come from the market. And open the market, open the centralized exchange pricing at the resulting rate that comes off that Dutch auction. And then, obviously, we're doing a lot of work with the data aggregators. We're getting more and more listing information. Someone had tweeted at me yesterday that the fees look right on DeFi Llama, but the TVL isn't right. And I explained why we're having a challenge on the TVL, but that I think we have a resolution there. And the DeFi Llama team's been very good working with us on that. As have most of the aggregators. So most of the aggregators have leaned in. I have some issues with some of them and how they count things. But in general, we've had very constructive conversations with folks. We're moving things along. And that awareness is important as we're going to market. And we certainly want to build visibility along those lines. So we go to the next one. So what we're doing on the community side, and you can read through this, and I don't need to read it for you, but basically, there's the onboard and educate, there's the community governance, which again, one hash, one vote, and making that very easy for people to reflect their will, and ensure that we have sufficient diversification of holders so that there isn't any single entity that's driving what happens on chain. There's partnerships and the influencer programs, and then retention of holder benefits. And the holder benefits, as I said, will start off with utility like discounts on Demo Prime, discounts on CBL, discounts on Figure loans, and continue to expand out as we continue to add more and more products onto the ecosystem. So I think we're at the last slide. Let's go to the one more. Sorry, our go-to-market milestones. This is the most important one. So we are working very, very diligently with Coinbase trying to get that listing, and I wanted them to be the first listing. But I said if I didn't get them by the end of the year, I would just open it up and push on other exchanges. And we are still in conversation with Coinbase. I'm still optimistic that we're going to be listed on Coinbase, but I'm also not going to slow down now and wait on the other exchanges. So I will be leaning in on OKX and Bybit and others. I think that there's a measured approach we're going to do with a set of exchanges and then Binance behind that first set to get better economics in terms of listing. But we're going to lean in and just go ahead and start push listings on the centralized exchanges, but also on the decentralized exchanges. And one of the things that we've been looking at is having hash be able to be ported and traded native on platforms like Solana and other platforms, Radium, for example, on Solana, where it can be staked from that other L1. It's an interesting concept. It's something we actually feel pretty enthusiastic about, and something that we're going to lean in on as we come into the first half of 26. So I think that's the last slide. Go to one more and make sure that I'm right. Indeed, I am. So, Victor, if you want to read off the questions, we'll just go through one by one and try to knock them all off.
Yeah, sure. Well, we got the first question here from Nina P. If the community doesn't like parts of the new setup of the coming governance proposal with Figure, what can we realistically do to change it?
Yeah, so two things you could do. One is vote no, and the other is offer up alternatives or changes to certain aspects of what the proposal is, where we can collectively say, well, let's put that out to vote. And again, I'm working on ways for better quorum and solicitation, where you can set up proposals, get sufficient community support, and then put that proposal formally to vote. And I want to create some sort of cadence to this so it happens regularly. But first thing to do would be go on the Provenance Telegram channel and say, this is what I like, this is what I don't like, see how the community reacts to that and engages with you. But if there's things you don't like about it, don't vote for it. And that's super important.
All right. Next question from Alex. What actually needs to happen before hash can get listed on bigger exchanges?
So nothing needs to happen for me to get hash on Kraken or OKX or some of the other big exchanges. We could have done that a while ago. It's just we had a view that we wanted to go to market on Coinbase as the first exchange for a host of reasons. And we've invested time and resources to do that. And again, I think that ultimately is going to pay off, but I don't necessarily want to be adhering to the timeline of which that's paying off. And so I'd rather just lean in and get this extended out onto other exchanges. But there isn't any significant lift or work that needs to be done. Again, it's a top 15 exchange by fees. It's a top 5 exchange by TVL. And it's an RWA centric platform, and most exchanges are very keen to have this as part of their offering. We just have to, as I said, we're just going to lean in and throw a wider net as we come into 26.
All right, thanks for that one. Next question from Maria. If there isn't much demand after the auction, does that break the whole tokenomics plan?
No, the two aren't related per se. So one is, we obviously have visibility of demand for hash as part of this. We wouldn't blindly put it out there. We've had some large investors ask us how to accumulate decent positions, especially from some of the whales, that legacy whales that have large hash positions aren't necessarily active in the ecosystem. But the clearing price on hash is completely independent of the tokenomics. The tokenomics is really around, we have gas fees, and gas fees on their own are supporting us to, a top 15 network by fees. We want network fees, which we think push us much higher. Those are all denominated in dollars. And so, the underlying price of hash doesn't matter. It matters how much hash you have to buy to pay those fees. And so, think of those two as separate constructs, where the auction is really clearing out any immediate selling pressure that's going to happen, or buying pressure that's going to happen with liquidity. It protects the market maker to a great extent. Tokenomics are our ability to push that fee number up from ranking us in the top 15 to ranking us in the top 5.
Right. Thanks for that one. And then we have Samuel asking, with Dutch auction, how do long-term holders avoid getting hurt while older positions are cleared?
Yeah, so you shouldn't get hurt. The way the Dutch auction works is I can say I want to buy 100 hash at 3 cents, and I'll buy 200 hash at 4 cents, and I'll buy 100 hash at 5 cents. And conversely, you'll have someone saying I'll sell 300 hash at 5 cents, 200 at 4 cents, and 100 at 3 cents. And what you're doing is you're finding the price that maximizes the volume to clear. And so in that situation, it'd be 4 cents where you're clearing 400 hash. But effectively, it provides a medium where you don't have the problem of a limit order book where you can move the market on thin market. It's a safe way to show size and clear out at market clearing prices. So effectively what it does is it can move a lot of hash without the underlying price volatility that would come from moving a lot of hash. And again, that price volatility is both directions. It's up and down. If you try to go in and buy $1 million of hash right now, the price would go up to 20 cents, right? And so what we need is a mechanism where that exchange of value can happen without creating a significant market volatility event.
Right. Next question. Will individuals be able to participate in the hash Dutch auction?
Yeah, both as buyers and sellers.
Right. Cool. Next question is
I think I just did.
yeah. We already covered Dutch action this one. So okay. Next question is, what security measures, including audits and validators setup, protect the Provenance network?
So June should talk to that, but I'm going to put that off unless June, you want to talk to that right now.
Yeah, we completed a security audit successfully of Provenance, and some of the work we're doing this upcoming year will be to continue to enhance security.
Yeah, there was a significant amount of security audit that happened as it related to us standing up Astra and the Demo Prime backend smart contract ecosystem and the Demo Prime contracts themselves. And so we do a better job about communicating what's been happening, but there's been an extensive amount of work on that front.
And we only audit any of them that we deploy, like the Astra contracts have been audited prior to deploying.
By third parties.
Right. Next question. Beyond Figure Helix, is Provenance looking to onboard other types of retail lenders and products in 2026? Or is the focus more growing on and decentralizing the existing business?
So both. We are, as I mentioned, June's working on a big biz dev opportunity in receivables. We're working on a big one in auto. Figure is beginning to do first lien mortgage, but in the form of HELOC, but in first lien position. And so I'd expect you to see more lending activity happening through third parties native to the ecosystem. And I'd expect you to see a lot of emphasis on Demo Prime as an alternative to warehouse financing for those lenders.
Thanks for that one. Next questions are there any avenues we could use to get more involved in building Provenance, be it directly for Provenance or a product build on Provenance?
Yeah, so we're gonna, as I said, I want to make sure that we don't do what a lot of L1s have done, which is incent people to build spurious applications, on the ecosystem. So we don't need a dating application built on Provenance. But I do want people to build on yields. I want, there's certainly protocol work that we can bounty out. And so, this is something we'll lean in on. in the coming quarter and build on this point. So expect to hear more from us on this, and there will be opportunities for folks to lean in and contribute, both in the form of building their own applications, economic bounty for the protocol, and then just benefit of the protocol, in the altruistic sense as well.
Right. Thanks. Next question. What upcoming features or offers are planned for Provenance, such as new models or integrations?
Yeah, I mean the biggest one is the equity ecosystem that I talked about. So having a full blockchain native centric public equity issued on chain, registered on chain, traded on chain, financed on chain, fiat on off rails through yields on chain. That complete ecosystem is basically a complete competitor to the existing equity vertical stack. And that is a significant application enhancement that's happening to Provenance. Certainly, and again, I think in a separate forum, June can have a discussion and talk about what they're doing on the protocol for TPS throughput and other things in terms of enhancing the protocol. Right now it's sufficient to do what we're trying to do, but if we're as successful as we hope to be on the equity side, for example, we're going to need to be able to enhance TPS. But from an application standpoint, the equity ecosystem is the big one.
Thanks. Next question. What does the passing of the Clarity Act mean for Provenance?
Yeah, so I've been very active lobbying around what we want out of the Clarity Act, and there's effectively three things that we're positioning for. One is we want a codification that we can use yields to settle non-security transactions outside of an ATS, outside of an exchange. So yields is a security. And the position that the old SEC had taken was, well, yields is a security, so if you use it to settle Bitcoin or figure loans or whatever, it has to trade on an alternative trading system or an exchange because it's a security. You can't run a bid offer in a non-security, or sorry, a non-exchange or a non-marketplace construct. And we've said no, yields isn't used for price discovery. It's used as a settlement mechanism, and clearly, without price discovery, that isn't a market activity. And as such, we should be able to use yields to settle Bitcoin outside of an ATS on an unregulated exchange, for example. And and I believe that we will be successful in that. But I think getting that codified is important. The second is around the role of the transfer agent. That today, when a security moves from one party to another, the transfer agent has to make best efforts to identify name and address. We would like best efforts to constitute wallet address as opposed to name and address, because it's really just for getting quorum. And so, from our perspective, there is no need for physical name and address. Wallet address is sufficient to drive quorum. We would like to see that codified. That is how the rules work today, but we'd like to see that codified, and we'd like to see that preempt state legislation around that. And then the third thing is around the production of DeFi. We would like pure decentralized finance, peer-to-peer transactions with no intermediation through third parties to be treated as peer-to-peer transactions and not treated as securities. And again, I think that's the position that the SEC has today. That was not the position the SEC had in the previous administration. We'd like to see that codified to future-proof decentralized finance.
Thanks. Next question from Daniel. What happens to hash tokenomics if Figure's business changes or slows down in future?
So if it slows down today, it will reduce the fees that are paid because Figure is a predominant fee payer within the ecosystem. And this is why, I'm very focused on getting other large, high quality institutions in and extracting more than gas fees and hitting network fees, because both those things will create much less reliance on Figure as supporting the validator community and create a more sustainable construct where, irrespective of what happens to Figure, the validators will have sufficient economics to do what they need to do and keep the network decentralized. So, again, our proposal going back to that is really around maximizing the economic construct or outlook for the validators and the delegators who are staking hash to those validators to ensure network decentralization.
Right. Next question. If Figure is running the Provenance Foundation, how do we make sure this doesn't turn into Figure controlling everything behind the scenes?
Yeah, so I think there's a couple of dynamics to it. I think one, the foundation itself is limited in what it can do, in terms of its ability to certainly it can't do things behind the scenes because everything's public. But in terms of its ability to modify the consensus mechanism, for example, or take control of the validator ecosystem, there isn't an ability to do that. There's natural protections that are built in that can't be overwritten by the foundation. I think the more important thing goes back to my aspect of easy quorum, right? Making sure that everyone has one hash, one vote, easy mechanism to do it, and a consistent way to have regular cadence where we're talking about what's happening on the network. We're getting community buy-in and community approval. What I'm hoping is that the changes that we're putting forth are going to actually create more transparency and more ownership, more feeling of ownership. You certainly have the ownership today, but it might sometimes feel like you don't, or it's hard to express that ownership. We want to truly have that decentralized ownership construct true. So, and as I said, anytime the hash holders want us out, we're out, and that's important for us as well. We are making a strategic bet around an approach that relies on underlying decentralization and decentralized finance. And so Provenance being a decentralized network is of the critical importance to us.
All right. We got one more question from YouTube. Do you foresee yield balance being insured like deposits in the future, or are the risks dissimilar?
Yeah, it won't have insurance per se in the form of FDIC insurance. You could have insurance if we did a different flavor of it. Right now, you don't need it because it's treasuries, and you're not. There really isn't an insurance construct against treasuries. I think that if we built a higher yielding version of yields, let's say one that participates in democratized prime, we would probably set up a private insurance protocol for that. And so you'd have, rather than a SOFR minus 35 coin, you might have, an 8% coin, but it would have an insurance pool that maybe took 50 basis points off of that, and provided loss protection on some portion, if not the entire portion of that stack. So, that's something that we've contemplated. And I think something that, right now you get effectively that when you lend on demo prime, you have a loan token that is that yield. And we could say, well, we would let yields assume that loan token. But again, that would need an insurance protocol to it because we'd want to ensure stable value for it. So, but as it exists today, it doesn't make sense because you've got treasuries as the underlying holding, not a levered bank balance sheet, which is why you have FDIC insurance.
Thanks. Next question. How do you make sure buy and burn isn't just propping the price in the short term?
Yeah, I mean, I think the way you do this is you do it on an expected regular cadence as opposed to a periodic market action. And so you basically say every month, throughout the course of the month, we're buying this much and burning it. And you have that predictability, and so that you're not impacting supply and demand imbalances in a limit order book, right? You're effectively gradually over time executing to a strategy which the market is fully aware and broadcasting to the market. And then I think you don't create spurious pops in the price that people can take advantage of. I think you create a more consistent and predictable demand for the token. And deflation, which is important for everybody.
Cool. Thanks. Now, up next, we have a question about delegations. Is it possible to apply for an additional delegation form from the foundation? I noticed in the report that some validators who contributed extra value to the Provenance ecosystem received additional delegations.
So, June, I'll defer that to you, or you can defer that.
Yeah, I mean, I think that this is something that we need to probably put a little bit more clarity around and structure. And we'll do that. That's something that's on the list.
Thanks. And one more question. Can you guys provide an update on the Q3 delegation distribution? It was expected in October, but there hasn't been any response yet.
Yes, I apologize for that. Our process sort of broke down. That will be distributed by next week at the latest.
Right. Thanks. And well, we got the most important question of the day. Where is the golden doodle?
He's I'm not sure where he is, but if he was here, he would have been barking at something like a tree or a leaf or something. It's not. He doesn't like it when I play pinball. It annoys him, so he leaves the room.
Oh, might join us in the next call.
If people want Clifford the dog, his name's Clifford. He's supposed to be the big red dog. He ended up being the medium rust-colored dog. But if people want Clifford in the next call, I will have Clifford sitting here with me.
Yeah, I'm pretty sure now it's becoming a recurring character in the Provenance Pool Schools. It's the pinball machine, and now Clifford.
All right. Any more questions we have? We still got a few more minutes.
Well, Phil, do we have anything waiting? I think we don't have any other questions. I think we cleared out all the questions and the comments on YouTube. So
look, everybody, I appreciate you hopping on. I would encourage you to use the Telegram channel to talk about the proposal that we're putting forth, and socialize that, with me and others. And if there's elements of it that you're uncomfortable with, let's have those conversations. I would expect to see next week a very easy way to vote your hash into that proposal. Looking forward to building in 26. I'm really, really excited about the traction that we've gotten coming into the end of the year, especially around yields and demo prime and Hastra. Looking forward to Nuva's launching their token using prime. That's going to be super cool. There's like some good stuff coming, and so excited that be in the position we're in. We just got to start extracting more fees for the delegators and the hash, for the validators and hash delegators, to ensure that we can push the ranking up higher, but more importantly, build a sustainable ecosystem to keep this thing decentralized.
Thanks a lot, Mike. Thanks a lot for taking the time to chat with the community today.
Thanks, everybody.
Well, have a good one, and happy holidays and happy New Year.
Yeah, happy New Year, happy holidays, everyone. We'll see you.